Hello everyone and welcome to this edition of Startup Central. I'm Avanne Dubbash. Well, let's focus in then on hiring trends and what's happening in terms of individual sectors as well as salary increases. Aon has come out with their latest note and report, and they believe that as per the survey, that salaries are expected to increase by 10.4% in FY23, and they're seeing double-digit salary increases in the country. Joining in to discuss this as well as some of the other interesting trends in the sector, we've got Roopank Choudhary. He's a partner at Aon. Roopank, thank you so much for taking time out and joining us today on Startup Central. You know, at a time when we're looking at a mass exodus within the entire startup space, when we're seeing a lot of layoffs taking place, it's definitely heartening and good news to read about something positive on that front with respect to salary increases. But I just want to start off by getting an overall and an all-round perspective then from you right now, because we are seeing global recessionary trends really play out. It is volatile in terms of the inflationary environment as well. And given that the big screaming headlines are about a lot of layoffs as well taking place, what is a major trend that you're observing in the startup ecosystem?
Sure. So I think first up is the fact that overall, if you look at India per se, I think the resilience shown by the country is far more than many other markets. And in spite of all the noise that we are hearing around global recession, India remains a little decoupled. And as a result, the business sentiment seems to be pretty high. Our surveys show that 76% of the organizations are talking about a better business outlook in 2023 as compared to last year. As a result, the overall increments seem to be quite high as well at 10.4%. I think a couple of things that we need to really look at out here is that some of the sectors which are talking about higher increases or more hiring are e-commerce, IT, ITES, professional services, and so on and so forth. And each of these sectors are now talking about high double-digit increments and a fair amount of growth in their own business sentiment. Now, coming to startups, say, if you look at the e-commerce companies, the other startups, as well as the fintech companies, the salary increments that we are seeing for them are actually even higher as compared to what India Inc. is talking about. At 13.4% actual and 12.1% for next year, there are indications that they will continue to pay reasonably high. At the same time, attrition, which has been a big bane for tech talent, digital talent, especially in the startup space, is also very high. As against India number of 20.3%, attrition for this sector, the startup sector, was 28.3%. So you're almost losing one third of the talent that you were getting in. That in turn is putting a lot of pressure on the startup ecosystem. So while there have been some murmurs and a fair amount of noise happening in this sector, but if you look at salary increases, attrition, and the war for talent, that seems to be also very, very high in this sector, which will continue to apply a lot of pressure on the wage hike.
Yeah, and that's something that I want to take forward as well going forward, because it seems like the IT services companies are really unlikely to see any respite in terms of employee attrition, because as per the Q4 earnings that were announced by Accenture as well, it seems that it gave a very early indication of that trend. So do you spoke of that attrition pressure is likely to continue. How much do you believe that a lot of these Indian IT companies are likely to be impacted, and are you seeing that we are likely to see this employee attrition levels continue to escalate up in the coming quarters as well?
So I think the attrition numbers are going to remain high, but if you look at the numbers, they have started plateauing since last year. It was 21, 22% last year, is down to 20%. So there is some bit of softening that we are seeing in attrition. At the same time, it still remains very high because the fundamental demand supply mismatch, especially for tech talent, digital talent, is very, very high. And most companies are still struggling to hold on to these people, which is why if you look at the offer reject rate, or the number of people having multiple offers continues to be very high. While the numbers have come down to an extent, but still in the next 2 or 3 quarters, we don't expect this to come down below 19, 20%. And at least till next year, the pressure will remain because most of these companies are still struggling to ring fence and hold on to their talent people have multiple opportunities, and there are enough and more job offers out in the market. And as long as there is somebody else paying out those kind of increments, you will have talent moving out not only to this sector, but even other sectors. Because if you look at the older, more traditional sectors, sectors which come in the middle, like financial services, the demand for digital and tech talent only keeps going up. And those sectors in turn keep poaching from the classical tech sectors where you have the most number of trained people, and the pressure keeps going back. So to answer your question, we expect the numbers to come down to an extent. There'll be some softening, but they will still remain fairly high to cause stress for most of these tech companies.
Okay, now let's talk about the good news, Roopank, that as per the survey, salaries in India are expected to increase by 10.4% in 2023 compared to an actual increase of 10.6% to date in 2022. And that's a little bit higher than the 9.9% increase that had been projected in the month of February. Walk us through which are the sectors that are expected to have the highest projected salary increase, and what the trend is likely to be in terms of the salary increases going forward.
So, if you look at the overall number, it's 10.6%, as you rightly said, for this year, and 10.4% for next year. Of course, there is a large gap between the manufacturing sector, which is talking about 9.7% for next year, and the services sector, which is 10.8%. So a lot of the growth, a lot of the attrition is happening in the services sector. So no surprises that that sector continues to be leading the way. If you look at the top five sectors giving increments this year and next year, there are no surprises, usual suspects. You have e-commerce, which at 12.8% for next year is amongst the highest. Then you have the professional services firms, the IT firms, IT-enabled services firms, and financial services. These are the top five that are talking about high increments this year as well as next year. The bottom five are more traditional sectors like FMCG, transportation, cement, real estate, hospitality, but they are bottom only for this year, 8 to 9%. If we talk about next year, these bottom five, which are more linked to the Indian economy, are actually talking about a higher increase. Whereas if you look at the top five sectors, which I spoke about, e-commerce, IT, ITES, while still quite high, their projected rate is a little lower. And I think this could be linked to the fact that as there are noises around global slowdown, recession, sectors which have a very, very strong linkage or a dependence on the global sectors are talking about a muted increase next year, though still very high. But sectors which are focusing more on domestic demand, like FMCG, like real estate, like cement, they are talking about a slightly higher increase next year. So that's one trend. The second trend is that in the past we have seen some test sectors go below 5-6%, and the others remain at 10%. Most of the sectors now are converging around the 9-10% mark, which we had seen something before COVID hit. So we are going back to that pre-COVID level where there is a clustering of sectors around the India average, which wasn't the case a couple of years back.
Right. Just give us I just wanted to get in your opinion as well on something that's been a very recent trend of late, moonlighting. And a lot of experts have to say that maybe this is now going to be the norm if, skill sets like coding, etc., are really learnt on the job, and, it is essential for startups. So it's something that we need to embrace. It's something that we need to manage. And, just given that the street is so divided on this contentious topic, just wanted to get in your take as to what it would mean for the IT sector, and is it something that we have to wake up to?
So when it comes to moonlighting, different companies will have a different point of view, and some fairly extreme. As far as moonlighting is concerned, it's something which came about because COVID brought different work models, hybrid work models at play. And when people are working from home, it gives them the flexibility to work the way they are working. And that is how this whole thing sort of arose. I think from a HR standpoint or an increment standpoint, I think you can possibly attribute or link a couple of things to moonlighting. The reason why moonlighting is happening today is because there is a sizable demand for digital tech talent. There is a huge gap between the demand and the supply. As a result, more and more IT professionals have the opportunity to do moonlighting because there are that many companies who are willing to give them that opportunity and give them those side gigs. So it is a fundamental outcome of the demand that we are seeing. As the demand continues to go up, which we see, the opportunities for moonlighting are also going to go up, right? Clearly. Secondly, this is also going to put a pressure on the wage cost, on salary increments, because this also makes people move around that much more. And thirdly, depending on how companies react to moonlighting, there is going to be a sizable attrition, because wherever there are opportunities for moonlighting, people will want to go there. As a result, anyways, we are seeing in our survey that in new age companies, one big reason for retention is flexible working arrangements, which is not the case for rest of India. And most IT professionals, most people in the tech industry will want to work with companies which are able to offer them more flexible work arrangements. So that's one more impact or fallout of what moonlighting will mean for the Indian tech industry.
Okay, fair enough. Just wanted to get in some more details then in terms of salary increases by industries. Where is it that we are likely to see going forward the most salary increases coming in sort of double digits? And what would be the outlook in terms of what business leaders need to look at in terms of ensuring that their workforce is resilient by way of retaining and searching for new talent?
Yeah. So, coming back to the sector story, going forward, I think the sectors which have given high increases this year continue to give high increases next year. So, e-commerce, professional services, IT are all in the range of 11 to 12.5%. Even same is the case with financial services, ITES. The sectors which will get added to these five will be FMCG, which is again going to be around about 10% next year. Transportation and logistics, which suffered heavily during COVID, is talking about a 10% number. Real estate infrastructure, which is hovered around about the 8% mark, is also talking about a 10% increase. And of course, we can't forget hospitality and restaurants, which took a big beating in 2020 and 2021 because of COVID, are now making a big comeback. And they are also talking about a 9.5% increase, which obviously is a very, very strong recovery as far as they are concerned. Now, when it comes to certain lessons or certain other aspects that India needs to look at, see, I think the first aspect is to be able to navigate the volatility. The volatility will continue for sure. It's going to go on till next year. And with these challenges, there is a need for a bit of caution as well. Businesses will have to manage input cost pressures, inflation, and manage their margins at the same time be able to attract and retain talent. So they have to obviously optimize investment in talent and build a larger model to build scalability rather than just sort of hiring. Secondly, the war for talent is possibly going to continue as supply struggles to catch up with demand. And here, organizations need to look at hiring for skills, flexible working arrangements, gig workers, and working on other areas like building their EVP and total rewards than just compensation. And finally, as we emerge from the pandemic and manage the recessionary pressures, the resilience that companies needs to bring in has to bring in forth a far more agile workforce, bringing in aspects around health and well-being, and also being able to have larger focus on ESG and DEI, because research has shown that organizations which are more agile to bring in these aspects will be there for the longer run and be able to win the larger war.
What do you think will be some of the challenges going forward, given the kind of global recessionary concerns that we're seeing really play out, the attrition levels remaining fairly high for IT companies that you think the startup industry is likely to face?
So I think clearly industries, even in the startup phase, which are more focused on domestic demand, are likely to be better off because the fundamentals of India remain extremely strong. Global leaders also have mentioned that in spite of the global recession, India remains fairly poised, strongly poised for growth. So sectors which are heavily dependent on the domestic demand will have an advantage as compared to sectors which have a much stronger reliance on uh, global tailwinds and global consumers. So I think that's one aspect. The other areas of challenge for the startup space is that this sector continues to be extremely volatile. As a result, everything linked to either hiring or laying off people or trying to defer bonus payouts or salary increments also is much higher. The elasticity or the impact of volatility is much higher in this sector. That's one challenge that this sector will face as compared to the market. If the markets tank, if the businesses slow down, the hiring freezes are going to be faster here. The salary cuts are going to be sort of faster here, right? And if you look at from the attrition stage, what companies need to watch out for is that business instability plays a very large role in why people leave these sort of startups or new age companies as compared to others. There is a slight bit of volatility or stress, in business, and they will make a beeline for more stable, horizons or more stable companies. So I think that's another challenge that startups will have to face, because their resilience is going to be far more difficult to measure and maintain, because the volatility of the business will have a far deeper impact on startups as compared to the rest of India.
All right. Thank you so much for taking time out and joining in and giving us a deeper insight as to what we can expect by way of individual sector trends, salary increases, as well as attrition levels, and of course your views on moonlighting as well.
Thank you so much.